Hi everyone, welcome back to Be Rich. Today we're going to talk about NSE, National Stock Exchange of India. And the strange anomaly it is that a privately held stock exchange in India seems to be making copious amounts of cash, while its bitter rival BSE seems to be in the wayward side. I thought we'll ask Sashwath a little bit more about that and he could explain to us what's happening in NSE.
Yeah, so the NSE or the National Stock Exchange, as most people believe, is not a governmentally owned enterprise. It operates privately and it's a privately owned company. And the Bombay Stock Exchange as well is publicly listed. So it's a publicly listed company which makes a profit out of equity trading or F&O trading and clearing fees and listing fees and stuff. So that's how stock exchanges work. And the National Stock Exchange in India is a complete monopoly. It's almost a monopoly. It has a 93% market share in terms of equity trading and an even higher market share in terms of futures and options trading. So it's basically it's a company which it's unrivaled. It has no competition, and with nothing on the horizon in terms of any new exchanges coming to take its place, it's sort of solidified right now as the leading exchange in India. So the equity market over the past year has been pretty stagnant. It hasn't moved much, and there hasn't been anything much to write home about. But interestingly enough, a year which has been terrible for stocks has been a wonderful year for the National Stock Exchange. The question is why. So let's look at some of the numbers. The cash equity trading which is your normal stock buying and selling, had dipped by 20% in this year, and it's understandable. But the NSE has made record profits, and it posted a 40% rise in revenue and profits. And this amounted to $1.4 billion in terms of revenue and close to $914 million in terms of profits. So the company has done extremely well. And a lot of this, if you look deeper, has come from options trading. And there's been a lot of option trading which has been going on since the COVID-19 pandemic, which started and skyrocketed the amount of demat accounts which have opened up. There's been a surge in the amount of finfluencers who are finance influencers such as us. Okay, maybe not us, but more capable, aspiring financial influencers, more capable people who have persuaded the masses to sort of open up demat accounts and start trading and buying, at least investing. So
I wouldn't say future options is investing, but anyway.
Yes, investing is something which we've been promoting, but other influencers have been promoting trading as well as a get-rich-quick scheme.
Yeah.
But what that has meant is that there's been a record increase in demat account openings, and there's been a record uptake in option trading. But all of that is not extremely good news, because if you look at it deeper, which we will, it turns out to be quite sad. So NSE option premiums increased by over 70% over the past year, and it comprised of 4/5 of the NSE's transaction revenue compared to the pre-pandemic 1/3. So that's been a huge uptake, and the NSE market share, as I said, in terms of options, futures and options, is even greater than your equity trading, which basically means that NSE has cashed in on this huge increase in option trading. And now the question becomes, why do you think there has been an increase in option trading? And that's pretty much because the SEBI had come in and said no more 100x margin on equity trades.
Yes.
So if you want to take over.
No.
Yeah. So the SEBI basically said, you can't just give people 100 times what they're. So I can't put in 100 rupees and expect maybe 10,000 rupees.
Yeah, 100x.
Yeah, 100x. So if you can't expect to put in 100 rupees and trade in stocks worth 10,000 rupees. That's madness. That's what the SEBI said, and it basically clamped down on it and standardized it and said only 5x. So if I put in 100 rupees, the maximum I can leverage at a time is 500 rupees, not 10,000 rupees. And that's a huge decrease in the margin available. And what equity traders and traders in general who love margin, and we hate margin on this channel, but those who love margin, what they did was, they said, look at options. It has margin baked into the model. You're basically you're paying a tiny amount of money in terms of premium for the right to purchase. So I'll let you explain what options are very quickly.
No, you're doing very well. Explain.
Okay, so options are pretty much a right to buy a certain company or sell.
Name itself says it.
Yeah. So it's basically a right to buy or sell. You have the option of buying or selling a certain company and you have to pay a certain amount of money for this right.
Yes.
And on the other end,
a fraction of the cost.
A fraction of the cost, and your option value also decays over time as you have less amount of time, because mathematically speaking, the probability of your thing making a profit decreases. So your option price also decreases. Time is money, as they say. So your anyway, and options are basically it gives you the option. You don't have to act on it. You just do
the simple way of saying it for a layman like me is it's pretty much like gambling. What you're trying to do in options is you're trying to predict where a price of a share is going to be a week from now, a month from now, depending on the option you're buying. There are various types of options. So you predict ITC is going to be trading 500 rupees. That's an option. ITC trading at 300 rupees could be an option. So you bet on which option and you pay a fraction of the cost. And the further that you get closer and closer to the date the option is going to be called, and the further away you are from where your target is, the more expensive it becomes for you. So basically a gambling. You're trying to predict something that's unpredictable, which is the price of a share, and you're trying to make money off the betting. So instead of buying the share, owning it and then selling it for a profit, you are just buying the ownership, the would-be ownership for a cost, for a fee, and then you trade on that when the option is coming to call. The problem is when your prediction goes wayside, the whole bet goes wayside, and you have to then pay the margin cost, which is where the problem lies in future option trading.
Yeah, and there's also the other side to options, which is someone who writes options, and that's even riskier than actually trading in options, because you're basically opening yourself up to thousands and thousands of rupees of loss.
Yes, you become the bookie.
Yeah, you become the bookie, and that's something which influencers have been peddling as well, saying it's a get-rich-quick scheme where you just have to write an option, say that you will be willing to, you can write deep out of the money option, which is basically saying the chances of that happening are very low. So you can pocket whatever little premium you get. And my other uncle has said that it's like picking up a coin in front of a running train. That's how he'd liken it to. That's the other side of options. So these are the two sides of option trading. And the NSE, regardless of whether you personally make money on the option or not, stands to gain either way.
That's the house.
That's the house. And the house always wins, as they say. And let's look at some of the data, and it's actually very sad. 9 out of 10 traders, individual traders who, retail traders who invest in, or not invest, but rather trade in options, have made a loss. And the average loss has been a sum of rupees 1.1 lakh. And that's extremely concerning, because the number of individual traders in options has shot up by 5 to 8 times over 3 years. And 98% of the traders in the F&O segment, futures and options segment, end up trading in options. So you can imagine the scale of losses people have made, and I'm sure a lot of you also have relatives and friends who can recount stories of making a lot of losing a lot of money in terms of option trading. And the NSE has made a quick buck out of all of them who've made a loss. And the larger margin you take, the more the NSE stands to gain, because the volume of their transaction increases. So a larger portion of that chunk is something which they pocket, and they pocket it out right out of your pocket pretty much. So that is how the NSE has been able to turn a profit. And interestingly enough, F&O volumes have increased by 10 times since March 2020, since the COVID period. And a lot of this has come from the clamping down of margin. So a lot of the equity traders who used to trade on margin have jumped over ship to options, futures and options, and ended up either writing options or trading in them, because of the leverage which options give them. And finally, coming down to regulation, because the SEBI is already looking at the 9 out of 10 statistic, and they're forced to act. And I wanted to pick your brains on what you think will happen in terms of regulation.
I don't know. I don't think they'll do too much on it, because it's legalized gambling. What's happening?
Yeah.
And everybody in the house is making money. SEBI is also making money.
Yes.
It's not like SEBI is not making any money out of NSE.
Yeah.
So all of them stand to gain. So, on one side, they want to tell everybody be cautious. This is gambling. At the same time, they allow gambling.
Keep the money rolling.
Yeah, keep the money rolling. To the point, even BSE, which has been lagging behind in future options, they're trying to figure out. The new CEO has come, and he's trying to say, "Boss, we need to back it up. Come on, let's ratchet this up.
Yeah.
Let's offer something better.
Yeah.
Let our products be more attractive than NSE. Because let the floodgates open. Let us also make some cash on this. If he can make some money and it's legal, why can't we also make some money?
Interestingly enough, to speak to his point, the NSE paid the government 29,000 crores in the government and SEBI in the financial year 2023, which ended in March. And 700 crores went to SEBI, which is not a small amount of money. And the rest of the money went to the government. And 1 lakh crores over the past 5 years have been minted and handed on a silver platter to the government and SEBI. So
there's your answer. The government, which is struggling to generate cash, who's taxing you back and front, taxing you in all kinds of mysterious and innovative ways, they're doing jugglery on you. When they have this kind of free cash coming, there's no way they're going to let it go. The same reason why alcohol is still produced in this country, cigarettes are still sold in this country, though everything is known about it. Future and options are here to stay. But no matter how much me, my brother, and Sashwath have been telling you guys, don't do it, don't do it, don't do it, it's just too attractive.
Yeah.
The option, you see the headlines, some guy who became a multi-billionaire, multi-millionaire through trading, and they make it sound very easy. It's literally like opening your Apple or Android phone, which says today there's a 30% chance of rain. And you say, okay, that's good. I'll put a bet on it, it's going to rain today.
Yeah.
It's literally doing that. That's how people are trading in future options. They know nothing about the stocks. They know nothing about the company. They just look at some charts on what's happened yesterday, what's happened last week, what's happened last month. Then they say, okay, looking at this graph, chalo, let's put some money on it. Future options cannot be treated like that.
And for those who engage in algorithmic trading and Black-Scholes model and stuff, yes, but then the problem with the Indian market is that we're very different in terms of our market depth and the products we offer compared to the US. Because the US has extreme market depth in terms of liquidity, and there's always someone, even the most far out option which you want to buy or sell, your deep out of the money options, there's always someone willing to buy that or sell that in the US. Now you see a huge uptick in volume, but up till very recently, we didn't have that sort of volume.
No, not compared to US. We're nothing about US.
Yeah, so you get into these far out positions because someone tells you that it's a very lucrative deal, and then it becomes very difficult for you to exit out of it and cut your losses. So you're pretty much stuck on a sinking ship with no lifeboat, and that's a very dangerous opportunity.
And everybody looks at only their returns. For how many times X am I going to make in this deal? They don't bother looking at what Sashwath said, which is a life raft. If you're looking at something far out just because it looks like something like an easy bet and you're going to just make times 100, times 200, you just jump into it, think without looking right and left, and boss, it can climb upon you very fast.
Yeah.
So please do not, as we always say, do not trade in future options. Like Warren Buffett said, it's a weapon of mass destruction.
Not worth the risk.
Yeah, many people have borrowed money and then ended up in very dire straits, and some very extremely sad stories have always made headlines. It is a warning. There is no way everybody can come out as a winner in future options. Like everybody playing cards sitting around the table cannot be a winner. Same way everybody cannot be a winner in future options. And most people lose. As most people lose in cards, they lose in this. And their losses can be devastating.
And the only way you can win is by being the house. And when NSE shares list and you think that it's a value buy for you, that might be something you could consider.
Yeah. And another dumb thing is people try to tell you, if you're writing the options, you're the house. You're not.
You're not the house.
You're nowhere near the house. If anything, you're the bakra which is going to be making money off. So be very careful. Anyway, thank you for joining us today on Be Rich. I hope you found this video entertaining and insightful about what happens with NSE and how these guys make money off your back and my back. So thank you again for joining today on Be Rich. Please do subscribe to our videos and turn on the bell notification, And if we do turn on the bell notification, you'll be notified when we put up new content. And if you find these videos interesting and something you'd like to share with your friends and family, please do. Again, thank you for joining us today on Be Rich.
Thank you.
I will be in Kuala Lumpur, Malaysia on the 11th of June this year. That is a Sunday. I want to meet you guys at Sheraton Imperial Hotel between 4 p.m. and 7 p.m. on that day. The Sheraton Imperial Hotel is in Jalan Sultan Ismail area near Quill City Mall. The Kuala Lumpur monorail railway station is available nearby. You can meet me there. For further details, you can contact us on the WhatsApp number below or send us an email at the email given below. My team will contact you at the earliest. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.